Okay, I think we can kick off now. So welcome everyone to our second session of our MEVCA Future Readiness Series, where we try to help our ecosystem in the private capital markets in the Middle East to foresee and evaluate the company decisions from a right angle, trying to bring perspective from peers in the industry. For those of you who don't know me, I am Paula. I am the Executive Director of MEVCA. Today, we will focus on opportunities and threats during conflictive times. We have with us two very valuable panelists, Hisham Kassim. He is the managing partner of Kassim Legal. Hisham is a venture lawyer who has represented startups and venture funds throughout MENA for almost 20 years. Many of his clients have operated in conflict areas for years, so we welcome his legal expertise on mitigation and the risk and strategies our community members can use during times of conflict. We also have Habib Hazzan. He is the managing partner and co-founder of Ibtikar Fund, the only venture capital fund in Palestine. With over 30 years of experience at firms like McKinsey and IBM, he is a pioneer in navigating high-stakes, volatile markets. Habib has successfully raised and managed two funds, maintaining portfolio growth and pipeline stability through prolonged conflict and global crisis. The session will be a fireside chat between them. You can ask your questions during this session in the Q&A box that you will find below, and they will address them at the end of the session. Thank you, everyone, for joining us. Hisham and Habib, the stage is yours.
Thank you.
Thank you.
تفضل حبيب.
Okay, so hi everyone. كل عام وانتم بخير. I hope you are safe and that you can still enjoy. You could still enjoy Eid with the families in some kind of safe environment. Today we will share a little bit from my perspective things that we have done in the different various episodes that we had in conflicts that were local to us in Palestine, and what we have implemented in terms of scenario planning and in terms of contingency planning and to identify kind of opportunities and to deal with threats to as operating VC. Unfortunately, this is probably the area where I have more experience operating in Palestine than many of you. I hope your experience is short-term and ends soon. But for our purposes and for planning, we cannot be just planning on the positive and the optimistic scenario. I will share some slides I put together that basically reflected the thinking that we had before. Let me stop sharing. So basically, what we look at is some kind of like a playbook, let's call it that, to do some scenario planning, to think about the portfolio and the capital allocation in our portfolio. So basically this, before I go to that, what I want to do today is basically, I will not try to predict political scenarios. I think we all have the same exposure to information. I'm not in the decision-making hallways of the White House. If anybody is, I'm happy to know what goes in Trump's head, but I'm not going to predict. I'm going to say, okay, these are possible scenarios. You can agree with me on the scenarios, and you can disagree with me, but whatever it is, just plan according to some kind of scenarios that you believe in. So that's kind of like one of the things. I also not try to basically come and be presumptuous to say, okay, these are the sectors that will win and these are the sectors that will lose. I think we all have the same exposure to knowledge. If I tell you all that, tourism is going to suffer, okay, I'm not telling you anything new. So I'm telling you defense tech is an opportunity. Of course it is. But the question is where your companies are exposed, and for that you have more specific knowledge about how your company. So even in tourism, you might have a company that has a specific exposure to markets that is diversified. It might have not burning cash. So you cannot just say, okay, tourism, I'm going to shut it down. So the specifics of each portfolio companies are the most important thing, and you have to communicate that with the founders and with the LPs. But I want to share some universal principles that we applied, and I think should be applied, and in the conflict time, it should be applied differently and more rigorously. So the universal operating principles, I think, a lot of these will be things that you probably apply also during regular time. But in the time of conflicts, you have to be very religious about applying them. First of all, you have to maintain options for yourself. To be in a situation where you can actually, if you identified an opportunity to have enough capital to double down on it, in your portfolio, for example, and at the same time, not just continue business as is and giving money to everybody in your portfolio. So, and then you cannot have options to react to different scenarios. Another thing that I would say suggest now is to basically take your portfolio and just like rewrite and re-underwrite everything. Basically, think about every company that you have in your portfolio as if you're looking at it the first time, because what was true for that company in 2025 might not be true today. The assumptions, the supply chain cost, willingness to pay of customers, access to talent, all of these things, it might have changed. And if these have changed positively or negatively, just think about it again and think about how you're going to treat it. I think this other side of the same coin is to avoid the sunk cost bias. Basically, if you already invested in a company, you already gave it a lot of money, and now the conditions have changed, don't just continue backing it up. I think these are things that are universal and apply every day of the week, every time, conflict or not. But just be more kind of like religious about applying them now in these times. Now, the two things that might change a lot in the universal operating principle is the decision cadence. If you, for example, have a portfolio review once in a quarter, things will change a lot in a quarter. The scenarios that will emerge will change a lot. So I think you need to increase the decision cadence. If you were reviewing the portfolio quarterly, you need to do it monthly. And in some companies that are really sensitive to what's happening in the region, you might actually touch with them weekly. Especially early stage, especially companies that are on very thin ice. I think these companies, you need to check on them and see what is evolving weekly. If a major customer stopped working with them, you need to know sometimes immediately. So I think this is basically a crucial point, so that you catch indicators of distress in your portfolio companies and react to that. And at the same time, let's not all be kind of like gloomy, but at the same time, you might also have an opportunity. that you act on. You might identify an opportunity and you can act on, and you cannot wait for 3 months until that opportunity disappears. The other thing is that you have to communicate transparently. I guess it's a universal principle, of course. You always have to communicate transparently with your LPs, but with the founders. But I think you have to communicate transparently on what you are doing in the conflict. And you have to communicate also more frequently. You have to kind of like communicate that you're doing something, you're doing some risk mitigation planning, that you are thinking about the situation, the conflict. You're not just on cruise control and just waiting for whatever evolves, that you are aware exactly of the indicators of distress in your portfolio companies, that you have implemented the plans for the reallocation of capital, or that you have implemented plans for prolonged runways for companies, or delayed cycles of funding. So you have to communicate that, and you have to ask the founders also to provide you the information needed. So you have to communicate to the founder. On that, I think we need in terms of the fund, in terms of the communication, in terms of the LPs, you have to deliver the scenario-based exit projection if some things are delayed, if valuation are changing. You have to provide transparent sector exposure analysis if you're seeing specific opportunities or companies that are going to suffer a lot. If you're adjusting the reserve strategies. And basically, if you're doing some color coding of companies that are green, yellow, amber, or like red, you have to also talk about that. And I suggest this is kind of like an easy way to communicate things. In terms of the founders, I think you have to make sure that we have a longer term operating plan than usual. So not the 6-12 month thing, but just like a longer period, because things will take more time and will be delayed in this situation. You need to have a sensitivity analysis and a downside scenario budget. If worst case scenarios, whatever these are in your mind happen, how would the budget look like? Less new features, more preserving current customers, no new big initiatives, maybe. So these are the things that you might actually discuss, and this is kind of like the specifics of the companies that you have. If they can map, if your founders, specifically if they move goods around, if they move merchants, if they are in consumer goods, and if they are in physical commerce, you need to have a mapping of what happens with the supply chains. What happens if airports shut down and or more airports shut down? What happens if some ports are not activating or not acting? Do you have alternative points of entry? Do you have alternative supply chain solutions? So these are the things that you need to kind of push on the founders to kind of like think about. And also, the main thing is that founders sometimes, because they're dealing with so much, they just want to have like a rosy perspective, or kind of like, okay, tend sometimes to ignore the facts a little bit. So basically, sometimes the founders will tell you, let's see if this takes more than 1 month, we'll deal with it. If this conflict takes than 2 months, we'll deal with it. For now, we're okay. But you have to tell them like, okay, try to plan for fundraising timelines delay. Try to plan for a delayed normalization. What will happen if? Now, if everything kind of like, resumes and everything is back to normal quickly, okay, so you throw away all this contingency plan, and you throw away all this emergency budget, and you continue as well. But you need to know them, and you need to push the founders not to be overly optimistic and rosy thinkers, but realistically see, okay, what will happen if? So this is the communication you have with the founders and with the LPs. I kind of like, for the purposes of the discussion, I will put 3 scenarios on. You can agree with these scenarios, you can disagree with them. Whatever you believe might be the scenarios. You might have 5 scenarios or others, but just like put scenarios and start thinking in different aspects in the framework about how to deal with scenarios. So I put here like, scenarios that are often quoted and talked about in media. A short conflict, I don't see it ending by March 26, but let's say a short conflict ending by early March. People have mentioned the holiday season in the US, Easter, and then you have maybe the holiday season in Israel as a main player. So I don't know, but like, let's say a short conflict. And then a rapid return to regional stability. Everything opens up, there's a ceasefire, there's some kind of an agreement. That's one scenario. Then a scenario of regional escalation where like there's the component of ground operations. There are ground operations in Lebanon, but we're talking ground operation in somewhere in Iran. So that's kind of like, and then you have infrastructure damage. That's a regional escalation. That's a bad scenario, of course, but that's one scenario that there is. And there's a third scenario, which is like a prolonged low intensity type of thing. So, there's no declaration of end of war. There's no ceasefire declaration, no festivities, no conferences, no photo ops, but it continues as a uh, uh, kind of like an incident here, then 2 weeks later there's an incident somewhere else, there's maybe a missile going to Israel. It's kind of like if you think about what the Houthis at Yemen was doing for a long time with the southern city of Eilat in Israel, that basically got like the whole port there closed and the Bab el-Mandeb traffic stopping. So these are the scenarios that I put, and then you can start thinking about, okay, in each one of these scenarios, what do I do? And you have to think about 4 things, I think, just 4 categories. One is your pipeline strategy in each scenario. The other is the portfolio posture in each scenario. What do you do with your portfolio companies in each scenario? Then a capital allocation, so reserve strategy, and then your communication. Okay. I think if you think about, different scenarios and different these categories of pipeline, portfolio, reserve, basically capital allocation, and the communication, you start putting to yourself a framework to think about different threats and different opportunities that you might have. I'll go into one of the kind of like, the scenario. Don't want to go to all of them. We want to leave time for other things. But just for example, like if you take the low intensity conflict, then you think, okay, pipeline. Though I'm doing what I call the barbell strategy. So invest in 2 extremes only. Pipeline new companies, the exceptional category leaders that are thinking that are structural resilience, where the demand will scale with the uncertainty. So, if you come across, it's kind of like, in COVID, that would have been like anything that had to do with the remote education, like EdTech and all of these things. So if you had an opportunity to invest in Zoom when COVID started, that would be an example of an extreme company that you would not pass on. Okay, so here you might think about many other things, and your thoughts here are as good as mine. But I think you will identify these extreme things. Don't stop investing at all. Stop. You can do investments in these cases. Any investment that has dependent on like rapid micro normalization, I think you should avoid. So anything that says, okay, once this war ends now, we will be quickly up to speed, and then you're thinking about scenarios you think about is a prolonged conflict, then you don't do things. And then, kind of like, if you go to communication, part, you just talk about the long-term exit timeline extensions to the LPs. So basically, everything will take slower time, everything will be more cautious. So if you were thinking, if you're a company that was reaching your year 6 or 7, and you're thinking it will in 2026 have an exit, you might look at a delay of exit in this scenario. So you have to communicate this to the LPs. You have to think about that. And I think Hisham will shed some lights also about some kind of like other things that are legal and when talking to LPs. I think for the founders is you have to think about the operating plan, a downside contingency plan, and an opportunistic growth plan in this conflict, in this prolonged intensity conflict. So, I have written some thoughts about each one of these scenarios, but they are basically just a clear strategy. Now, what I want to leave you with is that basically you need to do these reassessments kind of like in a high frequency time. So basically, you go and you plan what happens in each one of these scenarios, and you do it again. This basically is you do it again. This cycle, you do it again. So you do 2 months, you do assess the scenarios, and then in 2 weeks you assess the scenarios. In another 2 weeks you think about it again. What is being evolving? What has been happening? In our case, for example, in Palestine in 2023, October 2023, when everything started, we had different scenarios. One scenario was, okay, that this conflict is going to be only in Gaza. Another scenario was, Gaza, West Bank. Another scenario was Gaza, West Bank, Lebanon. And then, what we saw later is that it's going also to have a regional aspect with Yemen, with Iran, and all of that. We were not thinking it will end in 2 months. We were thinking it will end, 6 months, and then it is lasting until now. So, what happens is that we did a scenario planning, and then we kept revising it. And I think that's when you keep revising it, but you know exactly what will happen in each scenario is the key component. So I think this is basically what you do in terms of the time plan for it. I think if you haven't done this, it's after 8, start doing it. Just think about your portfolio, look at it in terms of like, green, yellow, and red. Based on some kind of like initial information you have, then in the next few weeks, just like underwrite every company with the stress market conditions that are now. Think about the runway. Think about the prolonged funding cycles. Then in 30, 60 days, you have kind of like, to review and reassess, And then basically in 60 days, I think we'll have more clarity and more insights. And then you have to kind of like, plan to put the plan for the or kind of the remainder of the year. So these are the things I think if you do that, you will be able to identify the opportunities within your portfolio and then to identify opportunities outside. I think with each one of us portfolio, there are going to be emerge some winners that some companies, COVID was a global crisis. A lot of companies emerged as winners from it. A lot of funds emerged as winners from it. A lot of it was an opportunity to have great adoption of online demand in many countries that were slow to take it, in many countries that the regulation didn't allow it. I think things will happen the same way here. I think things that have to do with consumer spending, things that have to do with tourism is obviously the most stressed, but even in those you'll have specific companies that will emerge as better. So I think this is a kind of like a call for us all to basically look at the companies and stop basically acting as on cruise control, underwrite every company that you have in the portfolio and look opportunistically at the new pipeline. And I think the ones that will do it and communicate it will be able to have some kind of winners, even in the current situation, and even have new funds deployed and even have the exits that is needed in due time. It's not going to happen the next 2 weeks. You're not going to have an IPO in a stock market in the region in the next 2 weeks, probably. I might be wrong, but probably not. But then it's not going to be a total paralysis in everything. And you need to address it in the sense of, I know it's bad, I know it's going to maybe to get worse, but we have plans for also realistic scenarios. So I think reiteration, more frequency in communication, more frequency in assessing is the point that I want to leave. Thank you all. Hisham?
Thank you, Habib. Just want to say, Paula, they can type in their questions now, right?
Yes, yes. So everyone can start typing the questions and then we will address them at the end of the webinar.
Okay, yeah. I just saw the first question come in. Thank you, Nader. We'll address those. But there's a little button, so whenever you have a question, you can type it in. My presentation is gonna be much less interesting than Habib's, but it hopefully will tackle how you can make these changes. You can implement some of the recommendations that Habib was talking about. So there are three main things. One is a legal concept called force majeure. I think if you run a fund or if you're a portfolio company and you have a lawyer or a law buddy, this term must have come up at some point once the conflict started. And then with every conflict, there's always a rise in sanctions and who you can do business with and who you can't and what your obligations are. And then three are the legal strategies, how to implement actually what some of the recommendations that Habib went over. So can they raise their hand, Paula? Is that possible?
Yes, they can.
Okay, can I see a raise of hands if you've heard of the concept force majeure, and if anyone has recommended it to you for this conflict? You can, I know Habib has, we live in force majeure. Okay, I guess. Oh, all right. So force majeure is it's a French legal concept where someone to a contract says an act of God happened and I cannot perform. I was supposed to build you a house on this hill. There's a big flood. The hill has gone away or your land's gone away, so I cannot build your house anymore. So the most common examples of force majeure or acts of God are war, flooding, pandemics, riots, regional instability. But what we want to leave you with is that this conflict may not qualify as force majeure yet under the legal term, because the banks are still working, airports are off and on, still working. You still have the ability to perform. You may be able to delay, right? If you're supposed to perform something by a certain time period, you may be able to delay it. And even though this legal concept exists, you still have to take active steps to reduce your risk and reduce your damage. And the final thing is, I think most of you run funds that are registered either in the US or Cayman or ADGM, which are common law jurisdictions. This legal concept doesn't exist for most of you. So since you're in common law places, force majeure as a legal concept is not as well, it's not as well defined as it is in civil law countries. Okay, the next thing. So we saw this happen with the Ukraine-Russia war, a bunch of sanctions flared up. Luckily, I mean, not luckily, but it's convenient that Iran was always on the sanctions list. So this actually should have very little bearing on most of you. Most people in the Gulf or in the Arab world don't do a lot of business with Iran or with Iranian nationals or with Iranian companies. But if you do, now is the time to rerun OFAC, to look through what the sanctions rules are and make sure that you're complying with them. Now, in terms of how to de-risk, this is unfortunately very common for Palestinian startups and Lebanese startups. It's redundancy. It's putting in multiple systems in place in case one fails. It's very inefficient, it's expensive, but it's surprisingly effective. So that means having your workforce dispersed in multiple locations, not everyone in one building in Bahrain, for example. You have a workforce that's in 2 or 3 different countries, and hopefully some even outside of the Middle East. In terms of legal redundancies, this is usually when we start opening more corporations, subsidiaries with different bank accounts and different payment gateways. In case your main account or bank account is closed or is disrupted, you have a backup to continue business. And this is also when you start seeing people spreading their money across different jurisdictions. And the final is key vendors. I think Habib mentioned this. If you have supply chain issues, let's say you have one supplier in China, maybe now is the time to look for alternative suppliers in other places in the US and Latin America, somewhere else. So in terms of the legal component, this is when your main agreements get amended or changed. So for your LPAs, for example, most limited partnership agreements don't have a force majeure clause. Now is probably the time to include one. And we start changing the definitions of your investment period. You start prolonging your investment period. Most of you have the right to extend by 1 or 2 years. Now is probably the time to extend by 1 or 2 years. The same for your fund term. Most of you have fund terms of 10 years. So now maybe is the time to make it 11 or 12 years. And this is also when we start including decision making. So if the CEO is not available for whatever reason, there's no internet, you can't get a hold of them, who steps in his place or her place? So we have a backup plan for decision making so the company can keep operating and decisions can continue to be made. This is also a good time to start saying no to things, which I think Habib mentioned, your startups that are in red. This is when you look at your contracts, and if you need to terminate or break certain contracts, now is the time to do it. If there are projects that you are considering, probably now is not the time to do them. Now is the time to sort of reevaluate and change your existing agreements. Okay. So these are more immediate in Habib's timeline, first 30 to 60 days. For more long term, this is when companies start looking at different markets, different offering, different strategies, but that's probably not the immediate need right now. The immediate need right now is to give you optionality, flexibility, and start cutting the things that don't help you progress or help you go through this conflict. I think we touched on this. We want to touch on it again. It's very tempting to try and predict the outcome. Well, no one can predict the outcome. So you have multiple scenarios and you create strategies for each scenario. And this is the time to communicate weekly, monthly, probably not quarter. You probably need to do it more frequently than monthly or quarterly. That is that's my side of the presentation. I don't know, Habib, if you want to add anything else.
Let's see questions first.
Oh, we have Nader. Habib, I've noticed people jumping on to assumption on GDP impact scenario on NAV based on geopolitical risk when we don't fully understand any of the impact data. All we know so far is the operational impact, and they should be under control by now in most cases, but the new normal is still closing outstanding contracts to understand what the real market opportunities. Yeah.
Okay. I can take this. And then if it's not premature to have a view on all portfolio companies and opportunities that are emerging, I think Nader, this is what I kind of like said before in terms of, we all hear these big assumptions and predictions and all of that. But at the end of the day, we have the specifics of our companies that we communicate with the founders and tell them to feed back to us a bottom-up communication of what's happening with them in their markets. And we do this frequently. So, if we are on top of that, if we are knowing exactly what's happening to them, we might actually hear some pleasant surprises, and we will hear also the alert signals really in time. So in general, you will know about the macro. We will hear about it in the news, but then we have the inside information to our startups and to their performing and to their relationship with the clients and what they're feeling from markets. And this is what we should be kind of like, being informed about. This is the information that is most relevant rather than just like the generalistic, GDP increase or decrease. You might be in a sector that is going to not to be totally affected by GDP decrease. It might actually be increasing, but it's all overall weight in the country's GDP is very small, and the general GDP will drop because of oil prices, gas costs, or other things. So it is specifically what you need to know about your companies that is most relevant rather than these micro assumptions. Now, in terms of assessing, is it premature? There are, again, the three scenarios. What we want to do now in the next month is not basically shut down a company or kill a company or stop reserves for a company or all of that, but we want to know what will happen to this company if actually the long, like for example, a prolonged tension and the conflict in low intensity happens. We want to know what happens when that scenario is basically the prevailing scenario. So we don't want to wait till that scenario is evident in order to make it to start to get decision. We want to know now, okay, if we are going to have a regional escalation and we're going to have a total shutdown of all the airports, for example, for 2 months, what will happen? If it is a prolonged low intensity conflict, what will happen? And then when you know these things, you know exactly who also to kind of like keep an eye on, who you need to basically look at every 2 weeks. And then when that scenario starts being remote, then you're fine. You can go back to the normal with this company. But if that scenario happens, you know exactly which two companies in your portfolio that are going to be the ones that are going to have problems now, and you know that, and you have communicated that to LPs, and you have paid attention to these companies, and you have met with the founders every week. So this is basically kind of like the way to think about it.
Hey, we have another question. The only reason I'm reading these is because I don't think the panelists, the participants can see the questions. So we have
Yeah.
a question from Robbie. Based on what you've seen, how do you view regional LPs' confidence when it comes to allocating new capital to investment funds? I think this is the type of prediction question that's hard to answer. I don't know, Habib, if you.
Okay, so I'll answer from my experience in the previous conflicts. I think we can think about different types of investors. We had in our previous funds development funds such as IFC and Dutch Good Growth Fund and EBRD. These basically knew that in the time of conflict, it is their funds that are most needed. And in order to encourage and send a positive signal to the private sector investors of the high net worth individuals that make their family offices, they went along with the process and they continued with the process. I think in our case, being from Palestine, we don't have a sovereign wealth fund. We don't have sovereignty or wealth, but we don't have a sovereign wealth fund. But I think in this situation, we have a lot of sovereign wealth fund that reallocate and they give investment confidence. We haven't seen the need for that yet. I think if the need emerges, I think the governments in the region will react. High net worth individual corporates will probably delay decisions a little bit. But again, they will look at every fund based on the specifics of the funds, the metrics of the fund, and what this fund invests in. If you are a defense tech fund, again, if you're a tourism fund, it's different. So I think these are the things that we cannot generalize and we cannot predict. And it's going to be just like we look at our portfolio and the LPs, we look at our funds, the funds that they are looking at.
Thank you so much for the conversation. I have a couple of questions that I think can be relevant. Are there any resources our community can rely on at the moment?
So I think if you don't mind, Habib, I think for this one, this conflict is new for the Gulf, but it's not new that we've had portfolio companies and funds emerge and be very successful in conflict areas. So Habib is a prime example. We're a prime example where we've worked with Palestinian and Lebanese funds and startups. So the information is there, the resources are there, they just need to be adapted to the Gulf. And we saw the same thing happen during the Russia-Ukraine conflict as well. I don't know, Habib, if you want to add to that.
No, I think, yes, I think these are, and I think also like with the needed changes, but you can also resort back to the COVID-19 playbook. I think that was a very good reason for all of us about contingency planning, about the things that mentioned about reassessing, about galaxy. Because also, if you go back, remember the first time you had the shutdown about COVID, everybody thought it's going to be a 2 or 3 week thing. Then it prolonged. And then we adapted, and there were emerging opportunities from there, and they were like winners, and online banking, a lot of things that happened that were. So if you go back and revisit what has been done in other conflict areas, but also in other unexpected scenarios, we would find key lessons and kind of like modalities of operating plans in these situations.
And if you were a fund that has not gone through this kind of conflicts before, what would you prioritize at the moment with the situation that we have and the knowledge that we have?
I think as the fund manager, in order to enable all of these things that we mentioned, you need basically to communicate with the portfolio companies and kind of like, get from them an assessment of exposure. I just give an example. When the conflict started in Palestine in October 2023, by October 15th, we had an assessment from every company, basically for its revenue from Gaza, its revenue from the West Bank, and its revenue from the regional, from kind of the region or globally. So we were able to communicate. When we got this information within a week, we were able to communicate to our LPs that the most any of our portfolio companies has exposure to Palestine is 8%. So I think that bit soundbite alone, because we had it and we were able to communicate with LPs, basically said our companies are stable, our companies are diversified, they don't have a majority of their sales or operations in Palestine. So if the situation in Palestine, in terms of commerce, in terms of trade and all these things stops, still the exposure any of these companies have is 8%. Putting that number, putting that information and color that soundbite on was one of the crucial things to let everybody kind of like, catch their breath, not just like panic, and just continue operating regularly. And I think if you have this in your portfolio, you can have this information, you can have it, it might not be 8%, might be 15%, but still in a portfolio, in a big portfolio, you are communicating to the LPs that it's not all coming down, and it's not all problematic and all of kind of like, bad news.
Mm.
So I think for me, I would look at the fund managers where they're based, to have them to at least have a backup, because you never know what happens. So if there's two fund managers, I would like get a third as a standby in case something happens to one of them. This is a very morbid outlook, but it is something that you should communicate to your LPs, that you have something in place in case the fund managers are not available, or you can't find them, or they don't have internet, for example.
Yeah.
Um,
And where do you think most VC firms tend to underestimate risk when building scenarios in these complex moments?
I'll go first. The time. It is, I think everyone's hopeful and wishful. You should assume, again, we're not predicting, but the better way to plan is to assume for much longer conflict. If the conflict ends early, everyone's happy. It's great. You can go back to plan A, but it's the time. You should probably extend your horizon much longer, much farther than you're comfortable with. I don't know, Habib, if there's.
Yeah, in terms of as in terms of planning, you don't want to kind of like depress your portfolio companies and kind of like slam the brakes and on everything and everything. But I think in terms of being ready for two things, we spoke about the capital deployment and the reserve strategy. In our case, we knew when basically the conflict in Palestine started, that we most likely going to be we are always kind of like the only capital, only institutional capital in our startup, because they are early stage. But we also thought that, for some kind of like a year, let's say, after the conflict started, we're going to be the only capital. So if a company hits its, it's at the end of the runway within the 6 months, 9 months, you have to be ready to, if it's a good company, it's performing well and it's a winner, you have to be ready in terms of like bridging it so until the next round happens. So you have to think about that. You might be also the only one bridging this company with, and then when you give this signal of confidence in a company, knowing everything about it, knowing the conflict, living it, and you are giving it more money, I think that gives a good signal to everybody else that might come 3 months later or 6 months later than what you expected, but they are seeing you that you're there and committed, and they will continue with you.
Okay, fantastic. So thank you both so much. I think there are no more questions. Thank you for this insightful conversation. I think the people that attended have a real plan to work on right now, which was the intention. So thank you so much. It was really insightful, and looking forward to seeing you in person soon.
Thank you.
Stay safe.
All right. Stay
Bye bye.